What if I told you that while most people were losing money in crypto last year, one AI trading bot quietly turned $1,000 into 2.8 million? And what if I told you this happened completely automatically while the owner was literally sleeping? In the next 15 minutes, I'll break down exactly how this technology works and why it's reshaping the entire trading industry. This isn't science fiction, and it's not some get-rich-quick scheme. This is the reality of modern AI trading technology, currently being used by institutions, hedge funds, and now increasingly by individual investors who understand how these systems actually work. Here's the brutal truth about crypto trading. 90% of manual traders lose money, not because they're stupid, but because the market never stops. Bitcoin can swing 15% while you're sleeping. Ethereum can spike 30% during your lunch break. And traditional traders, they miss every single opportunity simply because they're human. The wealthy figured this out years ago. They stopped trying to time markets manually. Instead, they use AI systems that work 24/7, systems that never get emotional, never panic sell, and never miss a profitable opportunity. The technology that was once exclusive to Wall Street is now available to anyone who understands how it works. The system I'm about to explain uses three core AI technologies working together. Think of it like having three specialist traders working for you 24/7. One focused on arbitrage, one on pattern recognition, and one on market sentiment. Each handles what they do best, and together they create something remarkably powerful. But before I break down each component, if you're finding this breakdown of AI trading technology valuable, hit that like button and subscribe. This kind of analysis takes serious research, and your support helps us bring you more content like this. The first component is the arbitrage system. This AI monitors price differences across multiple cryptocurrency exchanges simultaneously. Here's how it works. Bitcoin might be trading at $43,200 on one exchange, but $43,380 on another. That $180 difference might seem small, but when you're trading larger amounts, those differences add up fast. A documented case study shows a trader who started with $5,000 using arbitrage principles. Over 6 months, they generated $47,000 in profits, a 940% return. Compare that to traditional investments averaging just 8% annually, and you start to see why this technology is gaining attention. The arbitrage system doesn't care about market direction. Whether crypto is in a bull market or a bear market, it profits from inefficiencies. Historical data shows these opportunities exist consistently because different exchanges have different liquidity levels, user bases, and geographic focuses. The second component analyzes historical price patterns using machine learning. This system has processed millions of price movements to identify recurring patterns that human traders typically miss. It's not about predicting the future. It's about recognizing mathematical probabilities based on historical behavior. A reported case involved a trader who had lost 15,000 pounds in manual trading. After switching to pattern-based automated systems, they generated 89,000 pounds in profits over 8 months. The key difference? The system removed emotional decision-making and relied on probabilities instead of gut feelings. What makes pattern recognition powerful is its ability to process information at scale. While a human trader might analyze a few charts, these systems analyze thousands of data points simultaneously, identifying patterns that would take humans months to recognize. The third component monitors market sentiment through social media, news feeds, and on-chain data. This system analyzes millions of data points every hour to gauge market psychology. When major news breaks, it can detect shifts in sentiment before they fully impact prices. A documented example shows a trader who started with $10,000 using sentiment-based signals. Over 9 months, they captured 17 major market movements, generating $127,000 in profits. The system helped them enter and exit positions based on sentiment shifts rather than price action alone. When these three systems work together, they create something far more powerful than the sum of their parts. The arbitrage system provides steady base returns, pattern recognition catches major moves, and sentiment analysis helps with timing. It's like having multiple strategies running simultaneously, each covering the other's weaknesses. A comprehensive case study documents someone who started with $25,000 using all three approaches. Over 11 months, their account grew to $312,000, a 1,248% return. What's remarkable isn't just the return, but the consistency across different market conditions. Here's what separates professional systems from gambling: sophisticated risk management. These systems never risk more than 2% of capital on any single trade. They use stop losses, position sizing, and diversification principles that institutional traders have used for decades. Historical analysis shows the maximum monthly drawdown for well-implemented systems averages around 8 to 12%. Compare that to manual crypto trading, where traders commonly lose 50 to 80% of their accounts in major market moves. And you understand why systematic approaches are gaining adoption. Understanding the infrastructure behind these systems helps explain their effectiveness. Professional setups require high-speed internet, reliable servers, and sophisticated software. The technology that once required millions in infrastructure is now accessible through cloud computing and modern platforms. The effectiveness of these systems depends on market inefficiencies. As more participants use similar technology, some opportunities decrease, but new ones emerge. The crypto market's 24/7 nature and global participation continue to create the conditions these systems exploit. Success with any trading system requires understanding the underlying principles. This includes basic market mechanics, risk management, and the specific strategies being employed. Education isn't optional. It's fundamental to long-term success in any trading approach. As with any trading activity, regulatory compliance is crucial. If this breakdown of AI trading technology has been valuable to you, make sure to like this video and subscribe. Hit that notification bell so you don't miss our analysis of emerging trends in automated trading and investment technology.